The budget's round the corner, and while it's most likely that there will be small changes, if at all, in the individual tax rules, it'll help to understand how things stand right now. Here's a quick primer. Firstly, there are two ways in which tax can be calculated: the new tax regime, which was introduced in Budget 2020, and the old tax regime. You have to decide which you want to follow at the start of the financial year. The new tax regime is simple. It's a flat rate of tax based on income tax slabs. The most important point to remember is that there are no deductions, so exemptions on house rent allowance and even the standard deduction are not allowed. There are 7 income slabs in the new tax regime. The first is 2.5 lakhs, which is non-taxable, and then every 2.5 lakh slab above that is progressively taxed higher. You move from 5% all the way up to 30% on income above 15 lakh rupees. Now, a lot of you will already be familiar with the old tax regime, but let's run through it just the same. There are just 4 slabs here. Income up to 2.5 lakh is tax-free once again. Income between 2.5 and 5 lakh rupees is taxed at 5%. 5 to 10 lakh rupees is taxed at 20%. And everything that you earn above 10 lakh rupees is taxed at 30%. Now, on the face of it, the rates are higher, but there are several deductions that you can claim to reduce the taxable income. First, there's the standard deduction of 50,000 rupees. This is applicable to all taxpayers who choose the old tax regime and does not require any proofs. There's also exemptions allowed on house rent allowance. And if you're claiming HRA of 1 lakh rupees, do remember that you'll have to provide proof, which is a valid rent agreement and the PAN of the person you're paying rent to. Then there are several sections that help you reduce your taxable income. The most important and most popular is Section 80C, which allows deductions of up to 1.5 lakh rupees to taxable income for a range of investments and expenses. These include the 5-year fixed deposit, public provident fund, equity-linked savings schemes, post office schemes, premium on term insurance, and even the principal repayment on a home loan. Section 80CCD allows for further deduction of 50,000 rupees on investments into the National Pension Scheme. Section 80D lets you reduce your taxable income if you're paying premium on a health insurance scheme, either for yourself or in fact for your senior citizen parents. Section 24 relates to interest payments on a home loan, and the total deduction in that section is 2 lakh rupees for an individual in a year. There are also deductions allowed for interest on education loans and for donations to charitable organizations. And finally, a cess of 4% is levied on the income tax under both the regimes in the form of the health and education cess. A final point to remember is that if you earn up to 5 lakh rupees on a net basis, you effectively won't be paying tax. And that's because you get a rebate from the tax department for tax payments of up to 12,500 rupees. That's all you need to know about the current tax rules. Of course, it could all change with Budget 2023, so you should stay tuned for all the news and updates. This is BQ Prime.